Commodity is basically anything tangible that has value to a consumer. Sometimes they're divided into categories as whether agricultural commodities like wheat or corn or soybeans, and mineral commodities like gold and silver and copper. Prices, like most things, are determined by supply and demand. That is, by the amount that producers are making or producing and the amount that consumers or businesses want to buy. Well, that has to do with the supply side of the market. In the Middle East, of course, is the large production of oil in those oil-rich countries. To the extent that there's less oil produced, which may occur because of the unrest, to the extent that that reduces the amount of supply, that will tend to raise the price of oil. And oil prices higher, that means anything derived from oil, like gasoline, will also be at a higher price. Like most commodities, it tends to be a world price. It's a fungible product that doesn't vary much from one country to another. Well, to the extent that ethanol adds to the supply of oil or its derivatives like gasoline, that by itself would tend to make the price lower than it might otherwise would be. Personally, I don't think that justifies government subsidies of ethanol, but yeah, that would be a reason for a somewhat lower price. Well, again, gasoline, the price of gasoline depends on the price of oil, except to the extent that the government taxes it. Generally, if the oil price goes up quickly, the gasoline price will go up quickly. Oil prices have risen significantly over the last year, and it's not just because of the Middle East affecting the supply, but also as the economy has come out of recession, production increases, and manufacturing especially uses a lot of gasoline. If we're producing and manufacturing more goods, we're going to need more oil to produce that, which will raise the demand for the oil and increase the price. It's also true of emerging markets like India. China is a big buyer of oil, and as their economy keeps growing faster and faster, they're going to be buying more and more oil, which will increase the demand and therefore the price of oil. Yes, in fact, oil prices fell when we went into the recession because producers weren't producing as much because people weren't buying as much, so they didn't need as much oil to manufacture the fewer goods they were producing. So oil prices fell. Now that as we leave the recession, the demand for oil is increasing again as the plants get used more and therefore need more oil to run the plants. Well, I would say it's at least partly in an appearance, because I think people notice price increases more easily than they notice price decreases. So it might look that the price of gasoline is going up faster than when it goes down, just because it's something that we don't like, and we often notice things we don't like more than things we do like. Well, I would just say this: oil today represents a smaller fraction of our economy than it used to. So higher oil prices obviously aren't good for the economy, but the impact that they have, the adverse impact, would be significantly less than even 20 or 30 years ago. We have a more service economy, and we have a use of oil which just represents a smaller fraction of our total output. So we needn't be as concerned as maybe we would have been 20, 30 or more years ago when oil prices rise.